Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the big moves in the world of business. And boy, do we have some interesting financial maneuvers to dissect today. It looks like Lexaria Bioscience Corp has been busy making deals, and we're going to decode what all that means for their future. Before we dive in, if you love getting these unfiltered looks at company filings, smash that subscribe button. And hey, we've got a fantastic community over on Discord where we chat about these things in real time. The link is in the description below. This report we're re-looking at today is from Lexaria Bioscience Corp. And it's a Form 8K, which is like a snapshot of important events that happen between their regular quarterly or annual reports. Think of it as a company announcement filed with the SEC Lexaria Bioscience Corp. Is a company that's been involved in developing ways to deliver active ingredients more effectively, often focusing on things like cannabis and other botanicals. They re-aiming to improve how these substances get into the body. The main event here happened on the 26th of September 2025. The company announced they entered into a securities purchase agreement. Now, what does that really mean? It means they've agreed to sell some of their company stock and warrants to certain investors. This is how companies often raise money without taking out loans. This agreement was to sell two main things. First, they sold shares of their common stock. They called these the shares. They sold about 2.6 million of these shares at a price of $1.5. Per S-Hair, this was done through something called a registered direct offering. This means the shares were registered with the Securities and Exchange Commission, or SEC. Making them available to a broader range of investors, including institutional ones, as stated here with certain institutional investors. In addition to the shares, they also sold common stock purchase warrants. They call these the private placement warrants. Think of warrants like options to buy stock later at a preset price. They allowed investors to buy nearly 2.7 million shares of common stock for $1.37 per S-Hair. These warrants weren't T-registered with the SEC in the same way the shares were. They were offered under an exemption, basically saying these are for sophisticated investors who understand the risks. The total money they were aiming to raise from this deal was about $4 million before they pay for all the fees involved. This money is intended for general working capital and other corporate purposes, so they essentially getting cash to run the business, pay bills, or invest in new projects. This offering, the sale of both the shares and the warrants, was set to close on the 29th of September 2025. They've got a whole process to follow to make sure everything is legal and proper. They even have to file another registration statement to cover the shares that could be bought with these warrants. For the warrants to raise a cap on how many shares an investor can own, it's called a beneficial ownership limitation. Basically, an investor can own more than 4.99% of the company's outstanding shares after exercising their warrants. This is a common way for companies to prevent a single investor from gaining too much control too quickly, or to spread ownership more widely. However, investors can ask to increase this cap up to 9.99%. They also brought in H.C. Wainwright & Company, LLC, as a placement agent. This is like an investment bank that helps sell these securities. For their services, Lexaria agreed to pay them a fee of 7% of the money raised, and also issued them a certain number of warrants, 93,333 warrants, to be exact. These are called the placement agent warrants. These are also not registered under the Securities Act, again relying on those exemptions for sophisticated investors. The company plans to use the money from this offering for working capital and general corporate purposes. This is pretty standard language for these types of filings. It means they need cash to keep the lights on, pay employees, and fund day-to-day operations, or perhaps to invest in research and development or expand their business. The report also details that in connection with this offering, they entered into an engagement agreement with the placement agent. They agreed to pay a cash fee of 7% of the gross proceeds. That is about $280,000 on the $4 million raise. They also agreed to issue warrants to the placement agent, which is pretty common in these types of deals. These warrants have an exercise price of $1.875. This filing also includes a press release from the 26th of September 2025, announcing the pricing of the offering. This is essentially telling the public that the deal terms have been set. There is also a second press release dated the 29th of September 2025 announcing the closing of this offering. This means the deal is done, the money has been exchanged, and the shares and warrants have been issued. So within a few days, they announced the price and then the closing. Now, for my take on Lexaria Bioscience Corp, based on this filing, they are clearly in a growth phase, needing to raise capital to fund their operations and development. Selling stock and warrants like this is a common and often necessary way for companies, especially those in the biotech or emerging tech sectors, to get the funding they need. The fact that they are selling common stock directly and also offering warrants means they are looking to raise both immediate cash and potentially more cash in the future, if these warrants are exercised. The use of registered direct offerings and private placements shows a strategic approach to accessing different types of investors and capital. The registered direct offering makes the shares accessible to a wider market, while the private placement for warrants can offer a more attractive package to sophisticated investors. The fees paid to the placement agent, including cash and warrants, are standard in the industry, compensating them for their crucial role in facilitating these transactions. However, there are always risks. Issuing more stock or warrants can dilute the ownership stake of existing shareholders. If the stock price doesn't perform well, or if the warrants are exercised at a lower price than the market price, existing shareholders could see their percentage of ownership decrease. The company states the proceeds are for working capital and general corporate purposes, which is important. It means the funds are likely to be used to sustain and grow the business, rather than for a specific, potentially risky project. The reliance on exemptions for the private placement warrants means that these securities come with fewer disclosure requirements and potentially higher risk for the investors who purchase them. This is typical for such deals, but it is something existing and potential investors should be aware of. Looking at the bigger picture, Lexaria is trying to establish itself in a competitive market for ingredient delivery systems. Their success will depend on their ability to develop and commercialize their technology and to navigate the complex regulatory landscape. This capital raise is a critical step in that journey. It gives them the financial runway to continue their work, but it also comes with the responsibility to use those funds wisely and deliver value to shareholders. Overall, Lexaria is taking steps to secure necessary funding. Whether this capital raise translates into significant growth and value for shareholders will depend on their execution, market reception to their products, and the broader economic conditions affecting the sectors they operate in. It's a calculated move to fuel future operations, a move that balances immediate capital needs with long-term growth aspirations. But as always, the proof will be in the pudding in how they deploy this capital and the results they achieve. Alright, that is our decoding of Lexaria Bioscience Corp. Latest filing. What is your take on these financial maneuvers and what they signal for the company? Future, drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and subscribing ensures you won't miss our next deep dive. And don't forget to join the conversation on our Discord community, linked in the description. Thanks for watching. See you next time on Corporate Decoder.